Welcome to the webinar From Plate to Profit 2025 Restaurant Outlook. It's been brought to you by Avant Executive Group, and we're super excited to be discussing key drivers influencing consumer behavior and investment opportunities from QSR to fine dining. We welcome all of you all who are attending the webinar, and as we talk, please feel free to add questions in the chat, and we'll be happy to answer some of those at the end. We have an incredible panelist team with us today who represent extremely strong leadership and experience across all of the segments, QSR, fast casual, casual, and fine dining. And we're looking for a really robust conversation today. Joining us is Jack Moran, who is an international restaurant growth leader known for driving innovation in both the front and the back of the house. Jack currently leads global strategy and development at SPC Group, and as a EVP is working with brands like Paris Baguette and Lena's. And we're super excited to have you, Jack. Thank you for joining us. We also have Lindsay Morgan, known for driving amazing brand transformation, resulting in consistent every year same store comp sales. She was the CMO for Pizza Hut for 7 years and is now a fractional CMO for growth brands like Shipley Donuts and Fitness Connection. So super excited to hear her talk a little bit about strategy and communication. We are also joined by William Fage, who is an established international recruiter who's worked with many of the leading private equity firms globally to find senior talent for their portfolio companies. William is a partner at Avant and a recruitment firm with deep experience in hiring senior executives for both listed and PE-backed restaurant groups and consumer-facing businesses. And we look for William to be able to give us a lot of ideas on how investments can be better wielded, how they can go forward quicker with really strong leadership in the category. Anthony is joining us. Anthony Gunn-Ut, I believe is how we say it, but Anthony told me he would answer in whatever I said. I'm so sorry. I hope I pronounced it correctly. He is an incredible restaurant and hospitality global executive working with many famous Michelin star concepts, as well as brands like Zumba and Koya and LPM to scale and grow high ROI for investors by leaning into investment and user journey. We're looking forward to having him talk about the customer experience and how you can elevate that in collaboration. So we're going to have some discussion questions here, and they're going to be very top line. As we talk, we want our panelists to talk more from their experience and to feel free to add anything incrementally to the question. So market trends and consumer behavior is really a focus for most all of us in the restaurant industry right now. So what QSR, fast casual, and fine dining trends do you think we can learn from that are driving really experienced franchisees, publicly traded, and private equity investment now? I thought maybe Lindsay could start off that question for us.
Yeah, sure. Thanks for having me. Thrilled to be here with you guys. So I think when it comes to trends that we might see that are driving investment, I think I would bucket it in 3 ways. I think we'll see some consolidation continuing to happen across the space, whether that's in systems or with smaller brands being purchased by larger brands. I wouldn't be surprised if we saw some of that happen in the food aggregator space, where we have a lot of really similar players that are under tremendous pricing pressures. I think we'll see that through the second piece of possible scalable solutions. I think when you see some companies that have new leadership coming in and they're able to identify some scalable solutions that haven't been unlocked for those brands. One great example from my recent experience as a fractional CMO was at Shipley, where their new leadership and CEO brought in new point of sale system, new loyalty program, things that just weren't around for a system, even though it already had nearly 400 stores. And I think the last piece is experience will continue to be the king. You even see this in job descriptions from chief marketing officers transforming to be more chief experience officers. And how does that experience really translate through how customers are enjoying our brands and enjoying our restaurants?
I love that. I think you're exactly right. And one of the things I think a lot about is that the smaller brands didn't really have the opportunity to take advantage of a lot of technology. They grew kind of from a mom and pop and, get to a certain size and aren't able to scale up to the next level. So I think they're primed to be picked off in a positive way by, larger either private equity groups or holding companies that are thinking to themselves, this is just ripe for growth. So I think you come from a very strong point of view on that. Impressed with
Jennifer,
that.
I would also add, I think there's still a post-COVID kind of phenomenon
Yes.
that is happening in the industry. And what I mean by that is there's a lot of concepts that migrated to urban centers, assuming that they would have trade, robust trade, lunchtime, 5, 6 days a week. And now they have only 3. Those brands are under incredible economic pressure, and they provide investment opportunities for PE firms, et cetera, who are in the mood to bail them out, so to speak.
Right.
Also, there's been a migration of population still happening from the Northeast to the Southwest, from California to the Southwest, the growth of all of the areas in the South are also putting brands that establish themselves in the Northeast and in California under pressure. So
Yeah.
and when I say post-COVID, there's also that trend. There's still a lot of companies trying to bring their workers back into the office, and that is being met with different levels of success or non-success. But the rhythms and the routines of the evening dining in the city centers and the weekday dining in the city centers is completely changed since 2019. And I think for investors and for concept owners, that creates a whole set of opportunities and problems, but that's a trend.
I agree completely. And I think you would throw in there dining rooms. Dining rooms in QSR and fast casual are struggling to really get very many people in there, particularly casual. And so I think that is, again, a bit of the fallout from the COVID era. And the pricing going up and everything else that we've all been dealing with. I totally agree, Jack. Anybody else have anything they want to add to that? I want to talk a little bit about how these trends are shaping the investment strategy in the category. So we talked a little bit about small and mom and pop brands that are just kind of ripe for the plucking, but there's also worn and torn concepts that are still striving, and not all of them are thriving. They are working really hard to get over the fact that they've got a footprint that's got 75% of their dirt in a dining room. They're trying to get over the fact that their cost of goods and services is through the roof, and they're struggling on how to do that. Do you have some solutions, maybe Jack, on this one as well, for kind of the worn and torn concepts, the opportunity there could be to kind of have a new relevance for some of these brands that are really struggling?
I think there's an opportunity for investment in some of the smaller brands that are struggling. I was on a call today, just tangentially related with an investor in Istanbul who is investing in Paris and in the States, who was looking for small concepts that, struggling or not, with reasonable distinctive proposition that he could take to 10 stores. But that's all he could do. And then when he would get to 10, he would want to give it to somebody else because he didn't know how to go beyond that. But I think what I'm seeing in terms of investment opportunities, you don't have to invest in a concept thinking you can take it from 1 to 500. There are great opportunities to bring in a leadership team to take a store from where it is now to only the next level, and then exit profitably and hand that business on to another skilled set of operators and leaders who can take it further.
I love that. I think that it sort of addresses both sides of that. With sort of this whole effort against, sort of new experiences in dining, which I think is driving some of the new brands and some of the simpler brands. What do you all see as successful emerging concepts doing to kind of deliver more of a collaborative approach, more of a customer experience or journey? Thought Anthony, you might be able to talk a little bit about this, how you can sort of rev up the experience in the dining room that sets you apart from your competition.
Sure, So we realize now the key to grow lies in the partnership and collaborating. It's beyond F&B. It's how to create an emotional campaign around that, and how to layer your customer with the other brand. They have the same customer, and how to engage that to it and creating an experience around that. It's all about the emotion and the experience. If you look at LVMH, it's a great example right now where they're doing their luxury brand and they mix with their cafe or high-end restaurant or even hotel, because they bring that experience and that emotion to their customer. They're the same customer at the end of the day. Some of them might be new to them, actually bring it to their good and bring to the F&B too. It's a good sharing. That's where investors are keen to invest, because it opened more opportunity to it.
I love that. That was a great comment. In a challenging market where specific sectors of restaurant and dining, do you believe that the present best opportunities for private equity investment right now would be maybe niches in that sector, or are things that are particularly underappreciated? I know you, Jack, you mentioned a little bit around being able to take a brand from maybe 1 to 10 or 10 to 20. But we also are seeing so many brands, kind of even the ones that are going from 1 to 10 and 10 to 20, not knowing for sure exactly where to go and what's the next best step. And I don't know if that's hiring, for it. What would you feel like is going to be the answer for some of these really more struggling brands, even some of these big struggling brands that are at major companies with franchisees that are basically declaring bankruptcy?
I think there's some segments that I personally wouldn't want to be in, like the burger segment, like the pizza segment, like the chicken segment, because they're shark infested waters. If you want to enter into that space, you got to be really strong and really good and really distinctive. But to your other point, I think there are some underrepresented segments.
Right.
We're all trying to figure out what those are. I'm just going to just mention as an example, there is a little taco brand in Manhattan called Los Tacos Number One. They have 7 locations. They will open a couple more this year. They will end up at 100 million in sales by the end of this year.
Wow.
Selling and their AUV is around 7 million per store. Their 4-wall EBITDA is north of 30%. Their company-wide EBITDA is north of 20%. Now, they're in an underrepresented segment. If Chipotle is in the burrito segment, they're in the taco segment, and there's Taco Bell, but they're so mass market that I think there's other opportunities in the taco segment exhibited by something like this. That's a great investment opportunity for somebody. But if you want to buy in, they're smart, these people. It's not inexpensive to get in either. So because they see that they're operating in non-shark infested waters, in a blue ocean rather than a red ocean. But I think there are opportunities not just to go from 0 to 10, but there are opportunities to be in the non-shark infested waters with concepts that have the ability to grow and to grow the segment. And if I knew what those were, I would not be on this call. I'd be out rushing to invest in one of them. But those opportunities are out there for sure.
Right. Well, we've talked about Lindsay working with Shipley Donuts. I think that's kind of an interesting brand in the sense that it was really, established really kind of in the South. If I'm right, Lindsay, it kind of started there. I think it was in Oxford, Mississippi. I went to Ole Miss, so pretty sure Shipley was there, and it was pretty great. And it does have, some fierce competition, but it's not across the nation in every single, and it probably hasn't even thought about going across the globe. I'm seeing so many brands going across the globe so successfully, particularly a lot of work brands, a lot of to-go brands. I'm very impressed with that. I'm working with a brand called Luca It's super small donut, gelato, and coffee shop that is fantastic. They're kind of doing the reverse. They've started in Dubai and Sydney, and UK and Singapore, and now they're coming to the US with their first location in Florida. So it's interesting to see those brands, I'm sure, Jack, are ripe for being picked up because they have defined themselves very cleanly and very clearly. And Shipley would be another example of that. So I know those brands are like out there ready to take up to the next level, whether somebody takes them to 10 or 3,000. I'm always interested in small sliders. It's interesting because it's a little tiny concept. It's built in basically a container, and it's dropped. And they're like going like bang, crazy. But they are kind of in that quick service category that you might stay away from, Jack. So I don't know about that.
I was
But
going to say two things you said I think that are interesting, Jennifer and Jack, is that one, I think there's global cuisines that are the area to grow both ways. Like if you have a great American brand, I think there's development opportunity globally that hasn't been tapped for some
right.
brands. And then I think the flip where we're talking about tacos or Mediterranean, some global cuisine flavors, like seeing the numbers Cava's putting up for Q3 is pretty crazy. And so seeing these places where Jack said like blue ocean and less giant sharks ready to chomp you up. But I also think a lot of these concepts have very simple, clean menus that allow for more profitable back of house, cleaner, simpler operations where some of these legacy concepts have gotten kind of bloated.
Agree completely.
Yes.
And I thought we might get Anthony's point of view right now on sort of global geographic markets that could be super hot for growth, that would be a perfect place to take any one of these US brands overseas or potentially bring them over here, because I know you're more familiar with that than anything.
Totally. And I wanted to add something on the tacos. You're totally right. If you look at Tacombi, it was a mom and pop. And basically you have Danny Meyer, the luxury brand, arrive in the market and go to invest to it because it's a market grow to it. And it's very interesting, but you say, where is the best market right now? It all depends on your brand. In the US, everybody was looking for LA, New York, and everything. But you have such a Philadelphia, the second market, Boston, or if you go to a smaller city like this, because as you said, during the pandemic, people moved all around and everything. But how to create something authentic to it, that stick to it and speak to your audience. So it's a plenty emerging market. If you see in Middle East, before in Middle East, you have all the European and American arriving to Middle East. Now Middle East creating their own brand and bring it to the Europe and to the US. If you have Rivka, what happened to Rivka? They partner with Paris Society. That Paris Society was a brand only in the Europe, in Paris, essentially France, and they moved to the Middle East and they merged together. How to know your market together and be better to it and a better approach. In a fine dining, it's funny as you said, it's creating a brand and being like, creating a brand, it's not have one brand and open 500 of the same. You can have a solid brand around a specific storytelling to it and have different component, meaning Paris Society, you have French restaurant, you have Italian restaurant, but it's still Paris Society. And if you look all of them, it's all about the storytelling. It's their core. It's about to be in taking a landmark place and how to turn it more trendy, more fun to it, and getting an experience. And you use that landmark and you bring the food aspect business to it. That's what's happening. So yes, you have South of Asia, Middle East, second market in the US. It's way big where I will really tap it. As you saw, Miami now is explode. That's a great city to bring it as an example right now. The explosion, it's huge since the pandemic.
William, are you seeing more people needing to recruit for the US or more recruiting for, anywhere else in the world? Is it more global recruiting or is it more US recruiting? I mean, I think the US is just like, it's been leading restaurants, for example, across the nation for years across the world, in having so many kinds of chains and concepts and, being really willing to invest and making the effort. But I'd love to understand, what is that global look? What is it looking like? Do you have people, a lot of people and investors from the UK, from the Middle East, from, Australia, any people coming in and specifically wanting to get into the concepts here in the US.
You,
Sorry. Generally speaking, the largest and most successful brands in the restaurant sector are US, and so I think in Europe there is a lot of value placed on executives who've come out of Starbucks, Wendy's, Pizza Hut, etc. But unfortunately, mobility is generally the biggest issue that we recruiters come across, and so persuading executives to move from the US to Europe is often very, very tricky. And it's about the growth opportunity as well as compensation levels, which can be, which are generally still less in Europe. Executives like Jack, who've had a very, very international career, are actually, fairly few and far between. So generally speaking, in the UK, when we're running a search for a CEO or a C-suite for a restaurant business, we tend to be looking in the local market. Yeah, it's not because our clients don't love to really value international experience. It's just that on a practical level, it's often quite tricky.
Well, I personally will take any great job in Paris. I'm open to Italy. I actually am not sure there's many overseas that I wouldn't go to. So just FYI, keep me in mind. I love what I do, but I have to tell you, there's a super sexiness to going overseas. So thank you for that. I think that was great information. I'd love to get some thoughts from Lindsay. There are so many strategies that brands are using right now. They're looking at value menus. They're looking at leaning into their loyalty programs. They're looking at creating, a better preference around what they currently serve and can make it more interesting. Of course, they're trying to stay in their cogs. What are the strategies that you feel are some of the most successful and that you believe are actually going to drive growth for restaurants in the future moving forward?
I would say we've kind of hit on a couple of these things already, but I think it's doing a few ownable, distinct things that are right for your brand and doing them well. And I think a lot of times that comes for the need for really focused leadership, because it's really easy to want to jump on everything. And the way I've been translating this, and I'm chatting with some of my current clients, is that, you can look at the big box retailers of 15, 20 years ago where Walmart's discount, Target special, and Kmart was kind of trying to run the whole gamut. And it doesn't really play out because you're not really winning on everything by competing in everything.
Right.
And I think when it comes to communication strategies, that's a really big, that's an area that I love to chat about, but finding that same throttle of what's distinct and ownable for your brand that really makes sense. And then finding things that are relevant to like what Anthony's been talking about, things that are top of mind for customers right now that gives them a reason to come back again and again. And I think a couple examples of people who are doing a great job of that, and like Chili's right now, they have reinvigorated that ownable margarita bar where you come and you watch football, and they have the El Presidente drinks. But then at the same time, they also leaned into espresso martinis that are hot and very trendy right now, partnering with the Real Housewives to launch that concept. And so you're seeing that they're able to take like their distinct ownable assets and really protect that, and then dabble in some things that drive short-term relevancy and get that brand talked about again. I think another piece is just new media. You can see how that played out here in the last few weeks on election time of where people are investing. And a lot of it's not the traditional places that you're expecting. There's a lot more money going to places like TikTok or even podcasts.
Right.
One interesting thing that always sticks with me is that the number one job for Gen Z, as a child of the 80s, I would think it's like a doctor, a lawyer, president. No, Gen Z, they want to be an influencer. And so if you think that's their dream job, that's the magnet that they're drawn to, and that is what influences them. I think another really interesting opportunity for creative marketers and creative businesses who are willing to try some things is that unexpected marketing that can really break through, because customers are just inundated with same things, same menus, same topics. Some unexpected marketing partnerships. When I was at Pizza Hut, we did a partnership with the Las Vegas Sphere where we launched a QR code on the busiest travel day of the year. Or Target just announced a partnership with Wicked where, have the green shopping carts, and they're really embracing that experience within their own experience. Or Elf and Chipotle a few years ago, where just like unexpected places where you wouldn't see these brands partnering or showing up that really stick with you and make it memorable and tap into a new audience that I don't think you're always able to get in the same old ways.
Agree. And I think a lot of the collaboration that you're seeing out there really gets people their attention. I get very bored with the Affleck Duck, but when they brought the Affleck Duck into Dr. Peppertown and their fans, it got my notice. I mean, it really did drive a different point of view for me for around Dr. Pepper and even Affleck to some point. So collaboration, helping your brand stand for what it really stands for, the best, what you can own. I agree with all of that. I'm sure that you bring that to the party every day, and that's going to be interesting to see what you do with your new brands that you're working on. Jack, do you have some more things you want to add to that? I think I'm just going to add this one thing about value menus. Value menus are important, not because they want cheap meals, but just because people really can't afford to eat out as much right now. Maybe they will eventually when things will get a little bit better. But I'd love to understand a little bit about what else people can do to kind of really drive people in the door. If Jack, if you want to have any additional thoughts around strategies or tactics.
I would agree with Lindsay that I think she talked about ownable assets and brands being distinctive and owning what is distinctive about their brand and then amplifying that. I think that's super, super important. I think that brands grow by increasing physical and mental availability. So all of this TikTok and everything else is about making your brand top of mind when you're thinking of taco. Los Tacos #1, right? Like it's got to be there for me because my smartphone is not very far away and I can order and get it, or I can order and look and see where the nearest location is. So I think mental availability is really critical. But what I don't want to discount is physical availability.
Right.
If you talk about Dr. Pepper, if you get me interested, but I go to the store and it's not on the shelves, we have a problem. So
Right.
the physical availability must be married with the mental availability. And that means for some brands, it means, unfortunately, you have to open stores. Or to Anthony's point, if you're not opening multiple stores, that one store that you have has to be in a location that's so well known that when you go to that city, you're making a beeline to go there. But physical and mental availability will drive brand growth.
I agree with that. Anthony, you want to add anything to that?
Yeah, I mean, it's very simple. It's about creating a moment that resonates today and a legacy that endures tomorrow. So how you do that, I love to get an example, but you look at Nobu. Right now, they getting in the product. So they brought the tequila, but it's not enough because Japanese tequila does not resonate. But now they bring an artist to design their tequila for like a moment collaboration. So now what's happening, you have all those generations that follow those artists. It's gonna look at Nobu. And Nobu audience gonna look at that artist. That's how you create interest to it. That's very, very important. And as Jack said, you have to make sure if you're in one location or two locations or multiple, depending on your concept, you need to have a roadmap that speaks to your audience. All right. If you target the fashion people, so you're gonna go LA, New York, London, Milan, you have to follow where they are. You cannot recreate that. If you follow the artist the same way, and that's how it works, except you have always some exception where it's the moment of the summer, what I call it, or the moment of the winter. So if you're in the mountain or if you're at the beach at the summer, those are typical moments, but it's the same way. If you look what happened in this summer, all the beach all over the Europe collaborate with big brand, Gucci, all LVMH brand, Jacquemus, because they have to bring something else to the food. How to make it fun, experience, memorable, how to reach other people, new clients, build up, expanding your audience. That's what's the key. It is. And that's where I will invest in a company that understand that piece.
I love that. I think that's great. All right, let's transition a little bit here, and we're going to talk about private equity in terms of, Jack, do you feel they're in for the short term or they're in for the long term? What do you, I'm interested in that. I don't see a lot of fast sales, so I would tend to say it's the long term, but how familiar are they? I noticed some private equity are, heavily into restaurants, and then others may be sort of disparate in their investments and not the same. It seems like the stronger ones would be the ones that have a lot of restaurants or have had restaurants before. But are they in for the short-term game? Are they going to turn it back around, or are they going to bankrupt it? Or are they going to move forward with it for the long term?
Well, we hope that private equity will contact a firm like Avant and find the right executive and who's going to hire the right team to do the right thing for the brand at that moment. That's what we have to hope. But what I would clarify and say, there are two types of investors. There is a financial investor. A financial investor often wants to get in, put money in, watch the value of their investment grow, and they want to get out in 5 to 7 years. They not necessarily come from the industry. They don't come from the food and beverage business. They just see an opportunity. It's a line item on a P&L that has to be taken care of. That doesn't mean they still don't need great leadership to take the valuation of that concept from here to there. But the second type of investor is what I would call a strategic investor. A strategic investor is from the business, understands the business, wants to get involved with the concept because they believe they can add value. They can see what the concept is missing. If they only did this and this, it would be, and they, again, will call Avant or some agency and say, we need a CMO, we need an IT officer, and we need a head of operations, as well as a CEO. But they know what the brand needs, and they are in it maybe in a different kind of way than just a purely financial investor. And their time horizon could be a little bit longer because they're a little bit more understanding. But I think it really depends on strategic or financial investor, and then how savvy they are about what the opportunity presents and what they need to do to take the business to the next level.
Well, I think that leads us right into William. So we know that your hiring, your recruiting is going to truncate that process from what would normally be really having to understand something in the restaurant industry or the category or whatever area you're placing, and maybe you're placing all of them. Do you find that, first of all, what's that turnaround? How long does it take to get somebody in there and have them be able to hit the ground running? Particularly if they're experienced and they've come through you, so for one thing, they're going to be automatically a good chemistry, which I know that's always something you all talk a lot about, which I also value. The chemistry's got to be right. But would love to understand, how long it generally takes to get a team on board. And also, do you feel like those that you hire, when they are buying into a large franchise, do they recognize the value of getting buy-in from franchisees? I'm always interested in that because I feel like a lot of times private equity will buy a brand and they'll place the people, and maybe things can kind of go south because they didn't embrace the whole unit, the entire organization. So start with what does it take? What kind of timeline are you talking about generally in having somebody come on, finding the right people? What would somebody expect? And then, are they able to embrace all of the stakeholders? And is that important?
Yeah, sure. Adding on to the previous question, I think my experience in private equity, generally love to own a business as short as possible, but typically it's 3 to 5 years, and over in recent years that has crept up. So average hold periods are often significantly above 5 years. But the restaurant sector, though, is if you exclude sort of pandemic shocks to the sector, it is fairly low risk for private equity. And if they buy an attractive concept, concept, when it's 50 outlets, 50 stores, it is quite a simple strategy to grow that from 50 to 300 or 500, and then they often sell it to the next private equity owner who will take it from 500 to 1,500 or 2,000, and like for example in Atlanta where we do a lot of work, Tropical Smoothie Cafe has been a huge success, and that is now a 2 billion business, just been acquired by Blackstone, and in the space of 25 years that's grown from one store to almost 1,500. So it is generally a very attractive sector for private equity, and leadership is absolutely at the forefront of PE investors, for sure, and they often need a new CEO for different stages in the journey. Just as we've seen recently with Starbucks and Chipotle, Brian Niccol, I mean, that is probably the best advert for what recruiters can do. I mean, I don't know what recruiter placed Brian into Starbucks, but given the 23% pop in the share price of Starbucks, I mean, that's a phenomenal outcome, and it just shows that finding the right CEO can create literally billions and billions of value, even on day one, let alone sort of after 5 years. But yeah, private equity is generally quite risk averse, so they like to find the right CEO for the right situation. So generally speaking, in the sector, it's about growth and execution. So finding someone who can successfully grow a business, deliver the strategic plan, take the business from 50 stores to 300, and run the business seamlessly with a really good team around them, and make sure there are no hiccups, no big blow ups along the way. And the restaurant sector, I've always thought, and I do search in a number of other sectors, it's all about detail, and it's all about being very, very close to the day-to-day operations. So it's immensely complex, and there's so much can go wrong in this sector, but so much can go right as well. But yeah, I mean, looking at all the strategic moves that were made at Chipotle, I think it's well documented, all the things that Brian did. I think that is the kind of thing that private equity want as well. They want someone who can be really, really good on strategy. At the same time, private equity can help on the strategy side, so that the CEO is not alone. But on the day-to-day operations, they want someone who's just a really, really strong operator.
Right. I agree with that. I think strong operations is number one for a company coming in and taking over. I do think if you are largely franchised, it's very difficult if you don't embrace the franchisees and you don't know how to bring them on. And I actually see Lindsay shaking her head, and I'm going to get her to weigh in a little bit, because I think that's a huge part of sometimes the failure when you do buy into a brand and you don't embrace those owners. They have to walk together, and they're not mom and pop. So that's one of the things we always say, but there are things that you can do. I'd love to have your point of view, Lindsay, because I'm sure you worked every day with franchisees to help them improve.
Yeah, totally. I think a franchise business is such a unique animal, but I would say if you come up with an idea and the actual store does not want to execute it, that's no idea. So I think you have to have your franchise partners on board with you and feeling really strong on the idea, so you know that they're going to execute it. I usually find like a good grand reveal doesn't go that well. So making sure you have a couple people who are the next that turn the head of the franchise system is really helpful in getting things rolled out flawlessly. But I totally agree that you, especially in a non-mom and pop franchise system, really need the buy-in of the actual operators running that business.
I agree. So from an operational profitability and scalability, and Jackie talked about this earlier, being able to take it from 1 to 100 or 100 to 500, what are the key things that a brand has to focus on for that profitability and that scalability to be able to be successful?
I think, and I'm talking generally from a franchise point of view rather than a Chipotle, Starbucks company-owned point of view, but it's the same end game. I think the quality identifiers must be the same throughout the business in terms of visual merchandising, product freshness, product presentation, level of service, uniforms, cleanliness, as we said, a gazillion little details. But all of them have to be managed with the same level of care as in 100 stores as when you had 10. And in 1,000 stores as when you had 100. And if you slip from that, you break the brand promise, you break the predictability and the customer's mindset. They feel disappointed, let down, and there's too many other competitors for them to walk into should you let them down. So I'm going back to what William said. It's day-to-day operations. There's 1,000 little things that must be managed properly. It's not impossible to do. When I walk into, for better or worse, a McDonald's, whether it's company owned or franchised, whether that franchisee has 1 store or 20, I can never tell. Never.
Right.
Because
Right.
their quality, service, cleanliness is so embedded in that corporate culture that works incredibly well. But for a lot of other companies, it's a little bit more difficult, but that's what has to happen in order for you to scale. And I go back to the investment piece. Private equity doesn't want to have a salmonella outbreak on your watch. So they need to know if they're paying you as a CEO to bring in a team, you know how to manage all those little things really well, because it's the little things that will bring you down. You may be executing the strategy flawlessly, but all it takes is a couple of customers to get sick and your strategy goes out the window. So the blocking and the tackling, the day-to-day, being a good operator, or if you're not a good operator, hiring somebody who is and making sure they're on it is very, very critical.
Yeah, I would say that's a make or break for any brand, but it is surprising how often it's a break. They just didn't address it. I'm going to shift gears a little bit and talk about sustainability. I'd say 5 years ago, every restaurant out there was talking about sustainability and worrying about the straws and looking at, their pH-free eggs and 1,000 other things. Some of that's gone by the wayside, which is the cost of goods. But I'd be interested in understanding how significant that still is, investment criteria within the restaurant space. And thought, William, you might want to answer this for us. Do you see a need or a continuing request for leadership and officers in that sustainability arena? Are we still recognizing the importance of that, or has it kind of gone by the wayside as far as recruiting?
Yeah, no, I think, and I'd be keen to get Jack and Lindsay to contribute as well. I think it really depends on the size of the business, how at the forefront sustainability is. I mean, every restaurant business has to be very focused on food quality and food safety. But I think it's about, depending on how big the group is, whether they can actually afford to have a dedicated chief sustainability officer. Often it falls within the remit of corporate affairs or communications, so on the exco, and we've certainly seen more focus on in those specific roles, having someone who has led a sustainability strategy and successfully implemented one. But I think generally it's about scale. I think with the smaller groups that we sometimes work with, it's the fifth bullet point on their job description rather than sort of leading with that. So it all depends on size, I think. But
I think that's a good answer. Jack, do you have anything else to add on that? I would say in terms of if private equity is investing in your company, it depends on the outlook of the private equity firm. Is there one of the shareholders of the PE firm who's really environmentally or sustainability focused? If not, it becomes perhaps less of a concern. Also, I would say in PE or a company might be concerned ethically about sustainability. They also may be concerned about retention and attracting employees because of sustainability, because there is a cohort that won't come to work for you unless you're doing something good for the planet. So if I was a PE firm, I'd be concerned about that. The other thing I could say is that now at least in Europe, I'm in Paris right now today. There are a lot of regulations in place in the EU that force us to be sustainable. If you sit in the dining room, I cannot serve you a paper cup or paper plate. I cannot serve you a fork that is plastic, because everything that I give you in the dining room must be washable and reusable. So I'm sustainable without trying to be sustainable because the government is doing that for me. And I think in a lot of jurisdictions in the States, that happens the same way.
I think you're probably right. Less, much less, but I do think in general people are, they are expecting brands to be sustainable, to be green, to do the best things they can, and I think they give you credit for it. I don't know that it's the top of mind right this moment because we just have so many other issues, but I am sure that every company has somebody in their different disciplines that is, tracking that, even if they're not hiring for it. But I was just interested in where they were hiring. We're going to look at the future. Let's talk a little bit about 2025, and then we'll close and let some of the questions be answered. I'm going to start with Lindsay on this. Looking ahead, where do you see the most innovation or new trends happening in the restaurant industry?
Yeah, I mean, I think there's so much opportunity. I think flavor innovations, we were talking about global shifts going out of the US and into the US from other markets. I think there's going to be more of this macro, I'm going to use air quotes, health, things that feel more transparent around ingredients, things that feel more healthy, whether that what that means to customers, I think has a wide range. I think even on the flavor innovations, those unexpected or relevant collaborations, you can see Wendy's did the SpongeBob collab where they took their distinctive Frosty and used a relevant flavor of the pineapple with that partnership, and they saw a pop in their sales with that. I think innovations that are back of house friendly. I mentioned chilies earlier, but using your same sauces for your wings to redress your other items on your appetizers and make it feel fresh and new without adding any cost or operational complexities. I think we'll see loyalty-led value where people are continuously trying to compress visits and get that one more visit through a targeted piece. Jack mentioned this earlier, but I totally agree. I think with the return to office becoming bigger and bigger, you're going to see more growth in certain day parts like breakfast or things that are more experience led, where if you're going to spend your time and money, you want to really feel like you're getting something special and different that you couldn't do at your home.
I agree completely. I love that. I'm going to ask Anthony to weigh in, but I'm going to also have Jack and William, just since this is kind of the big outlook, the big future. What do you think is we're going to see, Anthony, in restaurants across the world that is going to be, unique and different and valuable as we move forward in 2025?
What we're seeing new, again, it's all those new collaborative between different brands. You have the car brands coming with the F&B, the fashion with F&B. Everybody's interesting to that. And Lindsay brought something very interesting. It's how you build the culture, but how you stay authentic. Shake Shack in Korea brought one of my partner, which is JP Park. It's the #1 restaurant North America, 2 stars Michelin Atomics. They brought him to create one pop-up burger in Shake Shack. You have Shop and Shop, they did it with Mark Forgion. Why? Because the customer is like, oh, this is elevated. But they take the same product, they just created something more creative. I think the winner in the future will be how to be the most creative. Hiring a CMO, do not be cheap in your strategy, in your emotion branding. That's the key element. And the culture. It's good to have a great product. It's great to have a great storytelling. How you translate that to your staff, because they're the one day-to-day operating. How you have someone's going to translate that. We say someone's going to be here to taking care of whatever your sustainability. But to me, it's to have someone going all your shop and bring the culture of the product, of the storytelling to each of your individual that you are hiring. So they knows what they're doing. They knows what it is. They speak to them. And people that they're keen to that, they understand what they're doing and everything, and they love the brand where they're working for because it's a great culture, they're the winner. That's for sure. You know, we never put enough on our staffing. Never, never. I think that's where is the key element. I think McDonald's does well for that.
I
And
think
you
you're saying it's worth the investment, it's worth the innovation, it's worth the long-term thinking of how to really drive the brand in a completely different way and set it apart. And I think you would be a great example of somebody that could attend a CMO CEO meeting for that incremental investment. You could prove to them that it was well worth it. I think that is what CMOs are up against all the time. William, do you want to add a little bit as far as what you see the face of recruiting and the future of hiring?
Yeah, I'm more focused on the deal side because I guess I'm a former investment banker, so that's what gets me excited. But and generally new deals drives new recruitment. So I think there will be a pickup in M&A activity next year, both corporate as well as private equity. Lower interest rates, the elections are now behind us. And so I think it's going to be a lot more activity. Buyers and sellers are going to agree on price where they haven't agreed in the last couple of years. So I think we're going to get a pickup in deals, both founder-owned businesses, a bit like Shipley's, which got sold, I think, 3 years ago now, into private equity. I think there are going to be more Shipley's out there, hopefully, where family or founders decide now is the time to get private capital on board to continue the growth journey. And I think there's going to be a lot of private equity selling businesses which they've held for a number of years and which now have got got to the stage where they can find a new owner. So yeah, I'm very bullish, and I think all of us will hopefully be involved in some way next year.
I love that, William. I love that positive note. Jack, you can wrap this up and then we'll take a few questions.
I would say that whenever there's M&A activity unleashed, it's good for the business. I think it brings new players in, it brings a new mindset, it increases the competitive landscape, which leads to more innovation. And I think for the industry, it creates a sense of ferment. So I think that what William is predicting, if it happens, I think will be good for all of us. It'll be really good for the customer long term, because I think the infusion of talent and new eyes on the business can only do good things, even though there'll be a few mistakes along the way. The other thing that I would say just is, I think despite the best intentions of your CMO and development team, don't underestimate the power of Netflix. Don't underestimate the power of TikTok. Don't underestimate the power of user-generated content. There are people out there marketing for your brand outside of your control, and you can leverage that to your advantage, or you can be victimized by it if you don't pay attention to it. But I think that whole ecosystem of what drives brand innovation is no longer within the four walls of the business. It's a much broader landscape, and there are non-paid employees participating in your brand creation that you need to pay attention to.
And your ad agency knows how to tap into that. Chili's, let's go back to it. Everybody's doing the big cheese ball all over social media, and they're seeing how far they can pull it. I mean, that's just driving crave, deliciousness, and amazing repeat business. So I agree with you completely. What questions do we have, Laurie, that have come up?
Hi, yeah. So the first one I think is for Lindsay. So the question is around loyalty apps. So with the increasing reliance on loyalty apps to drive engagement and retention, what lessons from Pizza Hut or any of your other brands or clients would you prioritize for restaurants aiming to stand out in 2025? Specifically, what, if anything, do you think the industry still underestimates about the potential of loyalty apps, not just in driving transactions, but in creating deeper emotional connections with guests? Sorry, that was a long one.
No, I think everyone wants that coveted loyalty, right? And I think QSR is just a promiscuous restaurants in general, promiscuous industry, right? Sometimes I'm in the mood for something, and sometimes you're in the mood for something else. And there are heavy switcher categories within QSR, and I think loyalty is one of those things that help. And you can see how other industries have done a great job with that. Hotels, airlines, where I don't want to fly American, but I'm like jumped in the gang and I can't get out. And so, what are the things that restaurants can learn from that? A lot of that has to do with like implied tiered status, implied benefits that you're getting. Chick-fil-A does a great job of their loyalty app of like teasing the next level for you, allowing exclusive redemptions that are only available to their loyalty customers because people want that experience. They want something that no one else is getting. And then I would say on lessons, I think Jack hit on this earlier, but down to like just getting the foundational basics right. So if you have a shaky foundation and you start adding in new tech features, at some point you have to pay the piper and pour that clean foundation. And so I would just say a little patience on building your MarTech the right way, because it will get you one way or the other, for the good or the bad.
You're on mute now, Lori.
Sorry about that. Yeah, so thanks, Lindsay. Did anybody else have anything to add on the loyalty piece before we move to the next one? Okay, so the next one is around technology. So what type, and it's really, I think, anyone's question who wants to answer it. What type of technology and or automation do you feel is going to be most important in the coming year, especially when thinking about either A, scaling a small brand, or B, turning a struggling brand around?
I'm going to answer quickly and say we are moving our European business to a back office system that uses AI to predict your sales and also to predict what you should produce, your product mix. Now, there's been all kinds of apps that have done that in the past, but they've never employed AI. And if you can get your production right and your sales right, then your staffing is correct, your waste is low, and your profitability increases. So for me, that's where I'm going to use technology in 2025, is trying to use AI to be predictive.
I think that's great. That's like the old-fashioned timing systems that we had 20 years ago, and you were able to predict your drive-through experience. That's fantastic. I agree with you.
Build on what Jack said, where I think the AI pieces are allowing for smaller brands to try things that have been pretty like bespoke and cost prohibitive for smaller brands to get into. I think you can see AI unlocking A/B testing in media. How do I get the right message to the right audience and figure it out super fast? You see Wendy's doing AI-enabled language ordering with a changing demographic in America that allows for better order accuracy. There's AI technology to just check back of house to make sure customers are getting what they want. We all have had a wrong order at a nice restaurant or a QSR restaurant or anything in between before. And most of the time you don't say anything, you probably just don't come back. And so how do we fix that retention earlier rather than trying to win those customers back? And then I think also AI back of house, the front of house. You see McDonald's globally doing a lot of the kiosk ordering, taking labor out of restaurants, and you can start to see some of that happening right now in the US too.
Awesome, thank you. I think that's it from a question standpoint.
Well, and we're coming up on 1:59. Thank you to all the incredible panelists and for Avant and hosting this and giving us such good insights from a recruiting perspective, which will make or break a brand in a minute. And it was great to meet all of you, and we'll look forward to getting to know you all better.
Thanks, Jennifer.
Thanks, everyone. Thanks, Jennifer.
Thank you, Jen.
For hosting.
Pleasure.
Appreciate it. Cheers, everyone.
Thanks. Bye-bye.